Hi CA students, let's revise CA Final AFM Chapter 5 Security Valuation Practical Question 16. Sam Limited has just paid a dividend of 2 rupees per share and it is expected to grow at 6% per annum. After paying dividend, the board declared to take up a project by retaining the next 3 annual dividends. It is expected that this project is of same risk as the existing projects. The results of these projects will start coming from the 4th year onwards from now. The dividends will then be 2.5 per share and will grow at 7% per annum. So the project will not give returns for 3 years, but the dividend will get increased from 2 to 2.5 and the growth also from 6 to 7%. An investor has 1000 shares in SAM Limited and wants a receipt of at least 2000 per annum from the investment. So this investor, irrespective of the project, he wants 2000 per annum. So even though the dividend stop, he should get it. How he will get? By selling his shares. So that the market value of the share is affected by the decision of this board. Show that the market value of this is affected by decision. Also show as to how the investor can maintain his target receipt from the investment for 3 years and improved income thereafter, given that the cost of capital is 8%. So first thing, we need to find out the share value now and after the project. So before the project and after the project. Before the project, which is now, they've given paid a dividend of 2 rupees, so which will be D0 and growth is 6%. So D0 into 1 plus G divided by KE minus G will be the value of share at present, which is coming up to 106 rupees. Now, if the board implements its decision, no dividend would be payable after 3 years and the dividend for year 4 would be 2.5 and growth rate is 7%. So using this, if we calculate the value of share, so 2.5 will be the dividend divided by KE minus G, which is 8% cost of capital minus 7% growth, and multiplied by discounting for 3 years, as it is after 3 years value, we are getting a share price of 198.46. Now we know before price and after price. So the share value has increased from 106 to 198.46. Now the investor can take up this situation as follows. Now the expected market price after 3 years will be 2.5 divided by 8% minus 7%, which is 250. This is the expected market price. After 2 years will be with 1 year discount rate and after 1 year will be with 2 years discount rate. So the expected market price after 3 years is 250, after 2 years is 231.48, after 1 year is 214. That is because from now on the share price is going to increase, right? So now the share value is nothing but this 198.46 and after 1 year 214.33, after 2 years 231.48, after 3 years 250 it became. Okay, now keeping these values, since the investor wants a receipt of at least 2000 per annum from this investment, but this project will not give any dividend, so to the extent of 2000 he will be selling the shares. In first year, since the value will be 214.33, he will be selling 10 shares to cope up the amount of 2000. So it will come up to 2143.3. If he sells 9 shares, then it will be less than 2000. So he wants at least 2000 per annum. So he has to sell 10 shares. For second year, he has to sell 9 shares to cope up the amount of 2000. So 9 into 231.48 will come up to 2083.32. In third year, he has to sell 8 shares which will directly come up to 2000. So if you see after the end of 3 years, he would have sold 10 9 8, so 17 shares. Presently holding 1000 shares minus the 17 will bring up to 973 shares, which will be valued at 250 each, bringing a value of 2,43,253. On these 973 shares, his dividend income for fourth year would be 2.5, because after the project the dividend will become 2.5 and the growth rate will become 7%. So 2432.5. So if the project is taken up by the company, the investor would be able to maintain his receipt of least 2000 for the first 3 years by selling 10 9 and 8 shares in the respective years, and would be getting increased income thereafter, which would be 2432.5. As of now, 1000 shares into 2 dividend, he is getting only 2000, but in the later on, even after maintaining 2000 income, he is getting around 2432.5. Thank you.